Right now, as we analyze the live market data, Datavault AI Inc., ticker symbol DVLT, is trading at 2.16 USD, showing a noticeable intraday pullback of minus 0.052 or 2.37% as of this specific moment on Wednesday afternoon. The tape is moving fast, and while a 2% drop might seem like standard noise for a small-cap tech stock, the context here is anything but standard. The volume is ticking over significantly, indicating that despite the red number on the screen, there is a churn of ownership happening under the surface. We are seeing shares move from weak hands, who are likely taking profits after the recent volatility, into the hands of those who are looking at the news cycle that has just hit the wires. The stock is hovering just above the $2.15 support level, a critical technical zone that has acted as a launchpad in previous sessions. If you are watching this on your Fidelity mobile app or tracking the ticks on WebBull, you are seeing a battle for control between the short-term profit takers and the long-term believers in the data monetization thesis. The expectation for Datavault AI, especially with AI in the name, is that it is just another speculative vaporware company trying to catch the tailwinds of the NVIDIA rally. The average retail investor, perhaps scrolling through a Robinhood stock trading list of top movers, sees a small-cap stock with a flashy name and assumes it is a pump-and-dump scheme with no real revenue and no real product. They expect a company that issues press releases filled with buzzwords but lacks tangible assets. That is the expectation. A hollow shell riding a hype cycle. But the reality is that Datavault AI is building something that is structurally different from the typical wrapper companies we see in this space. They are not just building a chatbot. They are engineering the financial rails for real-world asset RWA tokenization. The reality is that they are securing contracts that involve actual physical commodities, copper, gold, diamonds, and using their proprietary Sumerian technology to turn those heavy, illiquid assets into digital, tradable data packets. While the market sees a penny stock, the reality is a burgeoning infrastructure play for the digitization of the global commodities market. To understand why the stock is down today, despite the recent positive news flow, we have to look at the mechanics of selling the news. The stock had a massive run-up recently, surging over 30% in the last week alone. Traders using Interactive Brokers trading platforms often set automated sell orders to trim positions after such a violent move. What we are seeing at $2.16 is a natural cooling-off period, a consolidation that allows the moving averages to catch up to the price. But do not let this red candle fool you into thinking the story is over. The recent announcement regarding the $7 million deal with MTB Mining Limited in Tanzania is a fundamental shift in their business trajectory. This is not a pilot program or a memorandum of understanding that never goes anywhere. This is a commercial agreement to digitize substantial mineral reserves. By bringing transparency to the mining supply chain in East Africa, Datavault is proving that their tech works in the messy, complicated real world, not just in a sterile server room in Silicon Valley. Let's talk about the specific technology because that is where the value proposition lives. Most SoFi investing users are familiar with the concept of data as the new oil, but Datavault takes this literally. Their platform is designed to assign a value to datasets and then monetize them. In the case of the MTB Mining deal, they're taking the geological data, the supply chain data, and the provenance data of copper and gold and creating a digital twin. This digital twin can then be audited, tracked, and potentially traded. This solves a massive problem in the global market: trust. How do you know that the copper you're buying actually came from a conflict-free mine? Datavault's blockchain-based verification answers that. This utility is what separates them from the hundreds of AI companies that are just reselling ChatGPT access. A critical piece of the puzzle that is driving the long-term thesis here is the involvement of Scilex Holding Company. This is where things get incredibly interesting and somewhat unconventional. Datavault recently closed a second tranche of investment from Scilex, but they didn't just take a check, they took Bitcoin. The company received approximately 1,237 Bitcoin as part of the deal. This is a move that you rarely see outside of companies like MicroStrategy. By holding Bitcoin on the balance sheet, Datavault is effectively hedging its own equity against fiat currency debasement. For a Robinhood crypto enthusiast, this is a massive signal. It aligns the company's treasury strategy with the ethos of the crypto-native economy. It means that when you buy DVLT stock, you are getting implicit exposure to Bitcoin, but with the added upside of an operating business. This dual-engine value driver, operating revenue plus treasury appreciation, is a potent mix that the broader market has not fully priced in at $2.16. However, we must address the insider activity because transparency is key. Recently, the CFO, Brett Moyer, sold a block of shares. When an executive sells, the immediate reaction on Fidelity Investments forums is panic. Why is he selling if the future is so bright? But if you dig into the filings, you see that these sales are often for tax obligations related to the vesting of equity awards. It's not necessarily a lack of confidence. It's a liquidity event for an individual who is paid in stock. It's crucial to distinguish between dumping shares and covering taxes. The market often overreacts to Form 4 filings without reading the footnotes. That overreaction helps explain the pressure we are seeing on the stock price today. It creates a disconnect between the sentiment, fear of insider selling, and the fundamental reality, tax compliance. And that disconnect is often a buying opportunity for the astute observer. Let's look at the revenue guidance, because this is the metric that matters most for valuation models. The company recently updated its guidance for 2026, projecting revenue to hit $200 million. This is a staggering jump from their previous estimates of around $50 million. If they hit $200 million in revenue, a market cap in the $600 million range, which it sits roughly now, is incredibly cheap. Most high-growth AI and data companies trade at 10x or 20x revenue. Datavault is trading at a fraction of that forward multiple. The market is skeptical. The market is saying, we don't believe you can quadruple your revenue. This skepticism is the weight holding the stock down. But if they start stacking quarters that align with this trajectory, if they announce another deal like the MTB one, the re-rating will be violent. Investors who wait for the proof often miss the first 100% of the move. The partnership with Scilex also has a biotech angle. Datavault is licensing its AI tech to Scilex for use in drug discovery and data management in the biopharma space. This diversification is key. They are not just a mining data company. They are a data company that can work in mining, healthcare, media, and finance. They are industry agnostic. This reduces the risk for anyone holding Fidelity mutual funds that might be looking at this sector. If the mining deal slows down, the biotech revenue kicks in. If the biotech sector lags, the patent licensing revenue picks up. This portfolio approach to revenue generation is what builds resilience in a small-cap company. I want you to pause and think about the broader trend of real-world assets. Comment below how many shares of Datavault AI you currently hold, or if you think the tokenization of everything is the next big narrative for the 2026 bull market. It is fascinating to see if retail investors are positioning for this RWA shift before the institutions fully load the boat. Analyzing the chart on a deeper level, we see that DVLT has been forming a series of higher lows over the past month, despite today's drop. This structure is bullish. It suggests that every time the price dips, buyers are stepping in at a slightly higher level than before. The $2 mark is the psychological floor. As long as the stock stays above $2, the trend remains intact. If it breaks $2, we could see a flush down to $1.80, which would likely attract the value hunters using Schwab Intelligent Portfolio Screeners. The RSI on the daily chart has cooled off from overbought territory, which is healthy. A stock cannot go straight up forever. It needs to breathe, and that is what we are seeing today. Let's discuss the risks because we need to be professional and balanced. The biggest risk here is execution. Increasing revenue from $50 million to $200 million is a logistical nightmare. It requires hiring, scaling infrastructure, and managing complex international relationships.